comments. Alrighty. Let's go to the 5-minute. We can see that from the 5-minute the structure is still bullish as well. Invalidation of cities, structure shifts, and expansion after retracing into the 5-minute busy. If we look heading into this is 8:55 right now, we haven't headed to 9. We can see that we're also building this trendline liquidity right here, something that looks suspiciously well built in preparation to 9:30, which would be the market open. And we know that the 9:30 open likes to manipulate and wipe out liquidity. So keeping that in mind, we're gonna wait till price comes to 9:30, which is usually my time for trading. ERL looks good for sweep. Engineering sell side prior to equities open. Exactly, that's what I'm thinking as well. Wickless at the low. Yes, we do have a 5-minute wickless candle right down here as well. So let's see how price moves heading into the 9:30 open. So we ended up shooting up right at 9:15. Tapped the very buy side, swept it technically. Now I'm curious, would anyone attempt a turtle soup here? Valid. Yes, that is also true. We have trendline liquidity right here as well. So if price truly wanted to continue going higher, this would be what it would pursue. I wouldn't take it. I'd wait for more data. Here's the 9:30. Hit exactly right here with that manipulation. So wicked higher, pushed right down. You wait for the IFEG to short, so would you short this one right here, Parvies? Or would you short this one right here? Keeping in mind, that's the 5-minute structure that we had right there. This is the 1-minute. So the moment the 9:30 open happened, we ended up selling off immediately, right after. Interested to see all of your comments, all of the typing. Oh, really? So you short the 1-minute one? Right above if we were to put, it's not accurate because of the settings of this. It would kind of look like this. I see it. Let's see what happens. It's a solid reaction though. Came right back up. So with this action right here, I think the obvious sign, this is why we kind of wait and we don't chase. A sell-off like that might have seemed like it was completely bearish structure, or starting actually bearish structure for potential sell-off after taking out this internal buy-side liquidity. But as it came through this area, it ended up respecting this 15-minute order block and this 15-minute busy. The very last PD race it had. Now at this point though, I'm curious. Seeing this right here, price closing above the civvy and everything, would any of you go long or start looking for longs? This is how the 5-minute looks so far. You'd still be looking for a short. I wouldn't do anything either. I'd be waiting, because all of this to me is scamming, manipulative moves to wipe people out, to trap people in before revealing what the true expansion is going to be. Either be the trendline liquidity up here or the trendline liquidity down here. Now, does this speak to anyone or still nothing yet? It is now 9:41. So, after the 9:30 open, we started to accumulate liquidity. It's not really doing much of any expansions to any side. It's now 9:46. If we look at it from the 5-minute time frame, it looks rather ugly. The only thing we have as a 5-minute confluence is this technically 5-minute inversion, but price is still refusing to close lower and displace lower. If we look at it from the 1-minute point, we're fighting between PD arrays. So as always, when it kind of seems like iffy, the best action to do is simply wait for more data. Bearish will be on the 5-minute time frame. We do have this, if you're referring to that one. Would you be shorting this, Miss Cozy? You'd try it. I assume stop loss would be if it closed above the the order block body. Yeah, well, let's see how it goes. Lots of choppiness so far. And then it starts selling off. So ended up respecting the 5-minute order block and now started to push right at 9:53 was the last bullish candle before the move down. Right there. So the question is, knowing how much trendline liquidity we have here, let's see if it retraces here. There we go, there's the retracement. Would anyone short this 3-layered BPR? Meeks, Parves agree. Some people would already be in. I wouldn't doubt it with the 953. But I do want to say, for those that are saying that yes to this area, still knowing that it took out this low right here, would you still do it? Yeah, already took some liquidity. This is how it looks on the 15-minute. Right on the 15-minute order block. Right on the 15-minute busy. So does your judgment tell you that this would be an optimal area for a short? If, of course, if you didn't short up here, right? Trying to catch the second leg of distribution, not down. Right, patience would be the virtue here. See? So, constantly, it's gonna try and trick you. It's gonna try and deceive you by giving you potential opportunities. Try and FOMO you in, right? Because you see this and it's like, oh man, it started dropping. If I look at it from the perception of like, oh, let me not actually delete all of the drawings. But if I look at it from the perception of what we had in the 5-minute time frame, right? We took out this external liquidity. 930 gave us the pump right up. Then we ended up shooting right back down, and then we shot right back up, but we failed to displace higher. So okay, we sold off. Now if you remember what we've been talking about like in the previous one, when liquidity is swept, the probability of success for the distribution that you're looking for decreases little by every single ounce of liquidity that is consistently being taken. Let's say hypothetically we had the same exact VPR, but we never took out this low, and let's assume that S never took out the low either. Okay, so neither indexes took out the low, so there's no SMT or anything. Would this be greater probability for me? Yes. Would I have potentially taken it? Possibly, depending on how price would be reacting, if it sold off too fast or not. But the main difference was that it took out liquidity first, and something that Cozy said as well. As it took out that liquidity, we did not see this candle close below it. It wicked. So, if it's wicking, it's telling us that it's not really displacing through it, and if we look at it from different time frames, even this 5-minute order block right here, this is an inducement into the 5-minute order block to stop people that were previously long to potentially shoot it up. So there are multiple things telling you that where you're shorting has the probability of shooting up against you, right? There's the justification, but that the only area where you could potentially enter from, the probability of success is decreased just because of how it had the reaction right there. Let's see what happens right after. Okay, now this is good. So, you guys just witnessed Nasdaq pump right through 953 and validated this. Let's see. What does the 5-minute tell us? We still have all of this trendline liquidity up here that we haven't taken. We've taken Okay, we've taken a good chunk in this pump, but not all of it. It's also showing us that if we look at the 15-minute, just rejected an order block. But this is how our 1 minute time frame looks like. You could say that we have a potential 2022 model just based on how we did what seems to be a stop rate here and a 1 minute shift here. If we pull out the fibs from the range, equilibrium of this expansion is right at 953, which makes this our KPD rate. Now I personally would want to see how price would react if it were to come down here. Because 1, it invalidated the short setup. 2, there's still enough draw of liquidity to be pursued. And 3, it's a potential bullish model for continuation. Okay, will that push down too fast? Okay. It didn't do it. Nasdaq came right back down to the middle, and that's why it's good to be patient, and that's also why I never use really limit orders in imbalances or fair value gaps, because things like this can happen. Ran right through it, closed right below. That would have pretty much been entry and stop right back. But you know, it's easier to tell from this live action. That's why I like to wait for swing lows and swing highs to appear first, because it kind of gives you that little sentiment that okay, a swing low is happening, it's probable that it's going to respect the fair value gap and pivot. Or a swing high is happening, probable that it's going to do that, and it's not going to just immediately run through, rather than just slapping it the moment the candle taps, because then you can become a victim of that. Now there are occasions though that depending on how strong price is, you slap the very first retracement that happens, and that's something that I sometimes occasionally do, but it depends on how confident I am in that it's gonna run. Now, back to other time frames. This is how the 5 minute looks like. This is how the 15 minute looks like. So what do we have right here? From the information that the 15 minute and the 5 minute is giving alone, what do you think of what price has done? Why do you think that price did this? If you want to look at the 5 minutes, just let me know and I'll put it right back up. And if you're clueless, then I can share what I think. Right, that's one perceivable way. I mean, it's not wrong, it's what it did. But, to me, in my perception, first of all, after invalidating the bearish setup, we made a bullish setup to go even higher towards buy-side liquidity. But that setup then suddenly failed. Price cut right through it, which means that the 15-minute bullish setup that was supposed to start a trend even higher failed to displace higher after taking this high. The 5-minute setup also just took out a high and immediately failed to displace even higher. So that's telling me that structure has potential unfinished business in the downside, and we know what that business is right here. It also tells us that we did end up reaping the majority of the trendline liquidity right here, although we didn't take out buy side, but the failure in doing so was the biggest sign right here. So now that we've done this back to back, I would be looking for shorts. The fact that this failed, the fact that the 15-minute time frame structure failed to displace to the upside, screams to me that we are potentially going to come to all of this and potentially going to go all the way to the wickless candle right here. the external sell side of this range. Now, what are our PD arrays in this scenario? Similarly, we have a BPR, so that would be what I would be watching for at 953. We slightly retraced, we tapped the BPR. Would any of you guys do a position here? That's a good question. What do you think, Cozy? Would I? I want to see what everyone is going to say first before I reveal my answer. I won't play price. I'm not going to be scammy like that. We're all going to say it and then we're going to play the price. Why aren't you convinced on shorts, Anonymous? I want to hear your opinion on it. Looks like chop, completely reasonable, right? In this 5-minute range, we technically haven't expanded through with displacement, 100%. That's valid. That's a valid approach. Definitely better one to not have to deal with the chop. I'm gonna wait till Cozy finishes typing before I reveal my grand answer. I agree with the shorts. I would in fact enter a house size position here on the very first tap, because I don't know if it's going to start running immediately, and do an IO Fed with the expectation that it's going to retrace to the 953. Now, if it retraces into it, I would want to see a reaction before I enter full size. So let's try it right here. Bam, short position. Now for me, the reasoning, kind of like I was saying it, the 15 minutes simply just failed to expand higher. The fact that this failed to expand makes me, and the way that it's doing the wick, of course, makes me feel that price is indeed in pursuit of some additional liquidity before giving us the true move that it wants to do. In addition, looking at the 5-minute time frame, it is kind of choppy, not really much to rely on, but does seem like we might want to go for the downside after failing to close above the previous high with a body. And the 1-minute structure kind of is all over the place, slingshot up, slingshot down. The difference is, compared to this side, is that this time it did not take out the internal liquidity right here. So there's a chance that from at least from here, let me just try it out. You can get this, and then it's either break even or from here, bam, one of the two. So that's my opinion. Let's see what happens. Okay. This scenario, it's high resistance. We're not really pushing down very fast. It's a little bit iffy. We haven't taken out the draw, which is down here. But if I ever, in this scenario, if I saw, let's say, an SMT with S, I would get spooked out. But since we don't have S at our hand, we're going to have to rely on NAS alone. Took out the low. This case, I would want to see it close with displacement, of course, but because now that it took this out, If it technically really wanted to go higher, this would be a 3 drive into put it up here. No, where was it? It's here. Alright, this would be a 3 drive into the order block right here, which it looks like it's going to invalidate, but if it were to close the candle up above, it's still a nice little liquidity sweep that could potentially drive price back up. That would be a good perception of it, Anonymous, for sure. What time is it? Is there any news at 10? This is 10:14, and I have no idea if there's news. How do I put stop at break even? Alright, let's just assume that the stop is at break even. So I would have been stopped out at break even. It would have hit 953, and I would have been depressed because I got scammed. But look at that lovely reaction right there. Now, after everything that's happened here, assuming that you guys also entered short, if you guys did enter short, for those that did, and assuming you maybe scaled out, maybe got stopped at break even, what would you do with your position if you were still short after seeing this? This is how the 5-minute looks. It looks like it's respecting this 5-minute order block right here. And this is how the 15-minute looks. 15-minute looks like it retraced into this inversion and respected it, as well as this one right here. Are you convinced to hold? Or would you actually try entering a short here? Or would you wait for something else? Right judgment. You take a buy at 64 and close below. Alright. Let's see what happens. Okay, right back up. Now, very messy price action. That's for sure. We haven't really displaced anywhere. Neither upside, neither downside. We're still in this range technically. We are making lows, but after every low, come right back up. Now, what was the sign here that break even was the best choice and re-entry was not? Well, first of all, after you get stopped out at break even, price started to shoot back down, but it never made any new bearish PDRA. There's nothing to cling on. The second thing is that, of course, it respected this 1-minute order block, but the fact that we failed to displace lower, not once, but several times, 1, 2, 3, 4, 5, and this was the 5th time that we failed to displace lower, was a big sign that either price was going to continue chopping, or this in fact was a 3 drive to potentially rip it right back up. So with that in mind, what comes next? Anonymous would want longs. This is how the 15-minute time frame looks so far. This is how the 1 minute looks so far. For those that are looking at it, would you re-enter a short, or would you try and participate in a long, or would you wait for more data simply? Oh, it's an NFP week? Well, that makes sense. Of course, right? We always take a different approach to the market when it's an NFP week. Look for longs if when it invalidates. Right, and what would be the invalidation for the bearish setup here, Parvez? Okay. Well, we retraced back into the BPR right at 9:53, and it's currently 10:33. It's not 10:34 yet, but it looks like 10:34 is about to be nested right here as well. So keep in mind that information. We technically did a 3 drive that led to a 1-minute shift and a retracement to the PD array. We did, however, respect the SIBI right here as we pushed back down. We disrespected the SIBI right here, this busy right here, and made an inversion. And in the 5-minute, it looks like this. For those that were thinking long, would you still go long in this retracement? Wait for the 1034 reaction. Any other opinion before I reveal what I would do? Alright. Oh, Cozy's typing. Meeks would slap along. Alright. Multiple people would slap along. Some would wait a bit more. I would do nothing. I wouldn't do anything at this point. It could for sure shoot up, but for me to feel confident in if price is going to definitely expand higher, I would want to see price recover from this failure right here. Just because for the past times we shot up, we came right back down, we shot up, we shot right back down, we came right back up. It looks like we're still in this range, although the manipulation seems like it could have stopped. I'm not buying it yet, so I would wait for a bit more data, but that's just me. Let's see what happens. Now, it pivoted a bit, dropped a bit lower, pivoted a bit more, but in doing all of this, it showed me something that I wanted to see. As I said, I wanted to wait for more data. What's the new data? A new BPR. Ran right through it. Now I have somewhere where I can look for a long, even if it takes out this little high right here. Although I would hope it to take it with displacement. Meeks, you said that you would have slapped along. Congrats on your point. Also Cozy. The 1034 reaction would have been like this little bounce right here too. Alright, so everyone would have slapped. Oh, that would have been super close. But I would do it here. I'd give it a shot. failure to expand higher. So it came all the way to 953, 1034. It's continuously failing to expand up. And that would have been me getting stopped down. So in this case, could be given by how the fact that we failed to displace too strongly. But also I would say it's just one of those scenarios that you're wrong. Because although we're just still stuck in this range, and this goes to show, right, as much as I could be right about some things, I'm not always going to be right. And that's why risk management is always going to be the key play in any sort of trade. I don't see anything wrong with this trade. I would have 100% taken it in any other circumstance as well. The invalidation of the bearish structure, what seemed to be like the respect with a swing low right here for potential continuation higher. Of course, expecting that it's going to retrace to even average down, but since there was no new swing low here, I wouldn't have averaged down. And then there was the struggle for sure right here. But it invalidated, you cut the trade, and you wait for a new trade to appear right before your eyes. Now, let's see what happens right after. Now it's playing an entertaining type of hand. So, still choppy, but once more, came right back down, respected this 15-minute order block, technically a 5-minute order block as well, and we have this little SIBI right here after longs failed to displace higher. Would anyone participate in a short right there? Can I mark 110? Yeah, I can do that. Oh, it hasn't started yet. Any thoughts after the current price action has happened? Are you still bearish? Are you still bullish? Or are you sidelined? Waiting for NAS to stop its scamming? Mm-hmm. See, there's a lot of conflicting opinions now. Okay. With everything in mind, I'm actually curious for Mad Bulls, why do you think you're bullish? I mean, why do you think price is bullish? Just because of the 15-minute and the 5-minute PD rate being respected? Alright, no answer. Alright, let's give it more data and see what the result is. nice bearish move from it. It's not 11.10 yet, it's almost 11.10. Let's push it to 11.10. One more candle. Now, it's 11.10. Right in this SIBI right here. So, to me, from the information that's given right now, we're witnessing how price once more respected the order block in both time frames. We're witnessing how price, despite respecting this, taking out that low, immediately came right back up, but more specifically, did not do continuation after it took out this SIBI right here. Ideally, if we wanted it to be a firm move down, this had to be respected and continuation immediately for the draw right here. But it's not really showing any interest right here at the moment, which leads me to suspect that it might be doing something else. Now, I don't even notice the wickless highs. You got better eyes than me. Close above that 1 minute CBU with long. This one right here, Parvis. Alright. I agree with Parvis. I think that if it is to break this, since this is the resistance that's holding price right now, it may most likely start to make a bullish model to continue going right back up. But if it fails to do that, price is very likely to go in pursuit of these lows right here. Now, why would this be for me the most essential part of the structure right now? Because of several things. First of all, the only bullish structure that we had developed right here for continuation, we failed to this place once, which was here, right? We failed the expansion upward. Okay. Again, structure once more here, a little bit here as well. Failed the expansion twice. Came right back down here to where relatively solid confluence. Failed the expansion a third time. 3 times in a row. Price has failed to expand higher and pursue buy-side liquidity. And in failing to pursue that buy-side liquidity, it did an intermediate term high, 2 short-term highs, but it's not really showing any interest to take out this. That is telling me that there might definitely be reason to believe that it is more interested to take out all of this that's made right down there, after all of the chopping right here. Now with that in mind, there is still the fact that we disrespected this. So if we were to make a leg expansion here, for trace down here, I would with no doubt believe that we'd potentially come right back up here because there's no walls here. There's nothing else here stopping price from potentially going higher. No PD arrays. If we go to the 5 minute, no order blocks until we come right here. And 15 minute, well, we have the 15 minute order block right up there. So there's a high probability that if that last structure for bearishness fails, we will go up. Yeah, London highs were taken. London highs were taken a while ago. This would be Asia highs. Now, let's see what happens. I wouldn't do anything here yet. I would still wait. Okay. That's scammy. Pushed right up. Came right back down. But in doing so, it swept some internal liquidity. And now we're in our moment of truth. The BPR right here. So either price, this is similar, very similarly. If price fails now to displace higher and break this once and for all and invalidate the bearish setup, we're gonna go down. So my question is, would anyone go long here? Why would you wait, Parvis? Alright, Matt would go long. You think it would only reverse if it closes below 53? Okay. Right, Parvis. Are you sure you mean 53, or am I looking at something wrong? Alright, my man. Wouldn't long until we broke through. Right, so in this case, if anyone were to think of going long here, you should keep it in mind it's aggressive. Because although it did do this, there's a probability that, based on how firm the reaction is, that it might either wick right up, it might run right through. So I personally would wait for a swing low. Let's see, does it make it? No, close right below. And inversed the busy. So structure struggled a lot. Unable to hold. Did not take out the low yet either. Would anyone enter a short in this inverse right here? No thoughts? Well, I would enter a short here. Because now I know that high time frame has to fail to displace multiple times. I see that the only structure that we needed to break to give me that confirmation that we are going to go up has failed. And I see that the only PD array that could have sent price even higher also failed. So with the failure of everything and the consistent failure to try and take out any buy side, I would give this a shot. Oh, wrong button. Oh. Well, that was messy. It ended up pushing right up. Then it came right back down. Failed at the 5-minute order block right here. And once again disrespected everything that it had pushed through right here. So I would have definitely been put through drawdown. I mean this one right here. You mean this one right here? That one. Yeah, we rejected that one too. So now for me, since price came right back down to me, I would want to see it cannot close above the SIBI, or I would close out. Took out this low, did not take out that low. Let me look at the 5-minute time frame. But 5-minute time frame is showing me now some bearish structure right here. So now it's become a lot more defined what it could potentially do. So we have a 5-minute SIBI, we have a 5-minute mitigation block, we have our root candle. In this case, the nearest one would be, we have 1110, right? It's 1110, right? Alright, I don't remember what the root candles are. But the structure has developed a lot more, showing the potential move towards the downside. Would anyone attempt to enter a short on this 5-minute SIBI? This is how the 15-minute looks. Alright, it ended up wicking into, oh, it didn't tap it actually. I was thinking it was going to tap it, but it ended up wicking into the mitigation block. Oh no, we did have a little SIBI right here. Okay, question then, would anyone short this SIBI right there? See the typing. That 50-minute wick is looking like a propulsion block. I sense indecisiveness. Well, I'm already in technically, but I would be participating in that myself. I wouldn't want to see price close above it though. That is ugly. And there it went. So that was definitely nasty movement. Looking at that in the 1 minute would have been cruel. But price failed and took out the liquidity right there. Now stop will be placed at break even. And obviously scale out. and we would target the draw, which would seem to be right here. That's so gross. This is the stuff we have to endure in live price action. Ugh. But this is also something to absorb. So if you were to be short, or if you're not short, and you see price action doing exactly this, how do you interpret it? Look at all of those wicks. What do you think from that? Yes, that was the 5-minute cozy. Of course, break even first. I would interpret it as my sign to be out in majority. Because this is showing not just high resistance liquidity, but it's also showing lack of initiative to distribute lower. It is showing me that despite that we've made structure, that we've made all of this, if you look at it from the wick standpoint, every single candle is failing to close below this low. Every single time price has pushed lower, it has consistently failed to close below this 15-minute busy right here. So even if me being short from that area that I've been short, I would put my stop at break even with ideally exited majority, expecting that if price is definitely just not going to jump here, it's going to try ripping, try and take out the trendline liquidity that it has built continuously with every failure of the expansion, and try and take out all of this right here. So keeping that in mind, I already have the exit plan. The exit plan is the moment it tops me out of break even, but the moment that I see bearish structure just completely die. So I would want to see this 5-minute high being taken out, invalidate this 5-minute SIBI for a run to the upside, if it is going to fail here. Okay, so it did it, but it didn't do any busies. No busies at all, so that would have been break even, but there's like, it's made it difficult. Okay, the 5-minute we have a potential one. Let's wait for the 5-minute candle to close first. Okay, now we have it. So, keeping in mind this, but also keeping in mind this right here. What would you guys do? What is your perception with what price has done so far? Would you go short? Would you go long? Would you stay sidelined? This is how the 1-minute looks like. And this is how the 15-minute looks like. Parvies would just be watching. Perfectly reasonable. Is that a 5-minute CISD? Yeah. You'll take a buy at the 5-minute C. Does anyone join Cryptic in that choice? I would. I'd 100% vouch for that. So I would want to try and go long the moment it taps in. Okay, well that was too fast. I couldn't even react. But I would have definitely been in on the tap right there. With assumption that price is now going to try and invalidate this. It has to invalidate this. It's not that it's going to, oh, if it rejects, I'm still going to be in. No, this has to be broken. It has to be ran through. And it did. And there's the high. So, why did that work? Why did the other ones fail? Well, ideally, one, nasty price action, I'd say, was the majority of why most of them were a little bit sloppy. But in this case, this was our sign. Price failed to distribute lower, broke the bearish structure, made a 5-minute shift. It was kind of, you could say it was kind of 50-50 based on the PD arrays, but based on the confluences and everything else going on, it seemed like it was more probable that I was going to pivot from here. At least in my opinion. Alright, gang. So we did go through the hour. That was today's bar-to-bar backtesting session. I hope you guys enjoyed it, found something insightful. Also practice your price reading. Oh, this was one of those difficult days that would have definitely been stressful and a tedious thing to trade. I know for sure, like even here, I would have been stopped out. I would have been in drawdown. I would have had to hold the trade until my invalidation point. And eventually I would have caught a winner. That seemed nice confluence. But in between all of that mess, what makes you survive this is good sizing, good risk management, and patience. If I had bad psychology after getting stopped out in that one bad trade that I thought was going to reasonably work very nicely, I would have probably done bad choices in between all of this mess. I would have probably gone stopped out multiple times, and even in the short that I thought was going to work right here, ran right up, ran really high up. If my invalidation point, honestly, that you could have exited there anyway. You could have exited if it took out the high here, any point. I would have probably been, actually, I would have probably stopped that out at this high if I got ran through. I would have taken the short in the 5-minute right here. I would have made some of it back, but it would have been a difficult day. The only thing that helps you survive these things are always risk management. It's not necessarily the trading style. The trading style, anyone can learn how to a certain style, but what makes a profitable trader will always be risk management.